One second, I'll wear on my mic. Audible? Okay, great. So in the last class, we were seeing about private limited companies and how to register a private limited company. We ended up there. We saw the incorporation process. Okay, so we'll just continue from there. I will share my screen also with you so that you can see the content. Okay. Okay. We saw what a private limited company is. Just a recap of it. So section 2 subsection 68 defines what a private limited company is. So whenever you write in the exam, it is very important to mention few section numbers. It is, even though you cannot remember all section numbers, few section numbers are very important. For example, say like a private limited company definition. So what a private limited company is defined under section 2 subsection 8, which defines by giving few classifications, few items, by explaining these things. One second. Okay. Yeah, I will share the notes with you. I will share the notes with you. We've already waited for 15 minutes, Harika. Okay. So this is what it is. So they have given few items which you have to specifically mention when you are going to define a private limited company, like restricting the transfer of shares, and except 1% company, the maximum number of directors should the maximum number of members should be limited to 200. And when you're calculating that 200 also, you can exclude few people like the current employees and the past employees and who continue to be as shareholders in the company, and which prohibits to invite shares. Okay. I will see in the end of the session before I stop the session. At the end of the session, maybe 15 minutes or 20 minutes earlier, I will try to attach the notes what I have with me in the attachment session, and you can take it from there. Or I will also share it with the institute, and how they are sending you the link and all these things, they will mail it to you. Okay. Now let's concentrate on the class. So. A small recap on how the incorporation process was going on. See, whenever I'm going to incorporate a company, first I will decide yes whether company is suitable for me or not, and then I will decide what type of entity I'm going to start. Say when I'm going to start a private limited company, minimum 2 members, minimum 2 directors are required, and we will go on the flow. Okay. Uh, I think the chat, I will keep it aside. Maybe after 15-20 minutes, I'll see because it is distracting me a little bit. Okay. So, minimum 2 members or minimum 2 directors are required. And whenever I'm going to incorporate a company, I have to collect few proofs from them like PAN card, ID proof, and residence proof. So ID proof, we saw what are the list of ID proofs like Aadhaar, voter ID, driving license, or passport. And when it comes to the residence proof, four type of proofs were prescribed by the ministry, which is the bank statements or electricity bill or telephone bill or postpaid mobile bill, and all these residence proofs should not be older than 2 months. And after you collect all these documents, uh, the first thing what we do is we apply for the name of the we apply for digital signatures. And once the digital signatures we will apply digital signatures for all the members, irrespective director or member, for everyone, because EMOA, EAOA has to be signed. So we will apply for everyone. And once the digital signatures are processed and we get the digital signatures, and then we will, there's something called a SPICE Plus form. This SPICE Plus form is an integrated form. So earlier there were a lot of INCs which were like INC 20, 32, 33, 34, INC 9, INC 10, INC 8. So all these forms are all taken off, and right now it is only SPICE Plus form. So SPICE Plus form is an integrated form which will facilitate you to get maximum of 3 DIN numbers in the form itself. You can apply for name directly in the form itself. It will help you to get PAN number, TAN number, GST, PF, ESI, opening a bank account, everything within the form. So that is why SPICE Plus form is an integrated form. They've got all different kinds of registration under a single roof, and this form is a no fee form. So there is no fee for this form. You can apply just for free in this form. And you will, in this particular SPICE Plus form, it is divided into two divisions, like part A and part B. In the part A is the run form, which is a reserve unique name, where you will be applying for the name, and if the name is approved, it will be valid for the next 20 days, within which the incorporation process should get completed. And if you are very sure that you will be getting that name, then you can start filling part B as soon as you fill part A before you submit it. Okay, so either you can submit part A separately, wait for the approval, and then go ahead with part B, or you can fill part A and continue with part B continuously. And when after filling part B, also few attachments like consent to act as director in form DIR2, and their ID proof, address proofs, along with any other document based on the type of that we register. We'll attach it in SPICE B, and then we will start a form called as Agile. Agile is a newly introduced form. It is applicable for your exam, where you will be able to. My voice is echoing. No, I'm not talking. Is it okay now? Is my voice? Okay, okay. Yeah, thank you. So there's something called as an agile form. When I talk about agile form will facilitate 3 different types of registration in this. At the time of incorporation itself, 3 different types of incorporations are like your GST, your PF, and your ESI. And all the 5 director particulars have to be filled in agile form also. After agile form, there's something called as EMOA and EAOA, where you will put your object clause. If you want to enrich your articles of association, see, basically Companies Act is giving you a prescribed format of tables, saying that this is how an MOA should be. This is the standard format for AOA. The Companies Act itself is giving you a table saying that this is the prescribed format. Suppose if the company wants to enrich it, make changes in it, that is also possible. I am not very sure with the full form of Agile or SPICE. 1 second. Let me. I think you're able to see my screen. Maybe I'll see that later and I'll tell you. You can just Ajay, because I'm not very sure on the full forms. I don't remember much. So where did I stop? There's something called as EMOA, AOA, where if apart from the standard format, if you want to enrich your uh, existing formats, then it is allowed. So, but whenever you are going to make any changes in your MOA and AOA, you should always remember that there is something called as Act, which is superior, below which the AOA and MOA have to be to be modified. And always remember, it should not be ultra vires to the Act. Okay, and after all these documents are filed, and you will be uploading Spice B, Spice Part B, Agile, EMOA, EAOA along with INC9. INC9 is also a web-based form now. All these documents are prepared, you will download it, affix the DSC, and all these forms will be uploaded together. If satisfied, the company will get incorporated. After the company is incorporated, two things that you have to do immediately. One is filing INC22 within 30 days from the date of incorporation if you have not filed registered office details at the time of incorporation. At the time of incorporation, you will have a choice whether you will be saying your registered office address is this, or after incorporation within 30 days you will finalize. If you have not enclosed the registered office details at the time of incorporation, within 30 days you will have to specifically say this is what is my office address is in form INC 22, and within 180 days from the date of incorporation you have to file a declaration for commencement of business in form INC 20A. Now filing declaration for commencement of business has become mandatory, before which you are not supposed to do any activity, any business activity. This is how we basically incorporate a private limited companies. So few, yeah, INC 32, 33, 34, everything is removed now. There's no such forms. It is only Spice Plus. Okay. Yeah, Afros has replied saying what is the full form for application for registration of goods and service tax, uh, service tax identification number, employee state insurance number. So people, you can see in the chat box for the full form, you can copy paste it on your screen. Okay. Yashwanti, no problem. We're just doing a recap of what we were doing. So you can just continue. Okay. So few characteristics of private limited companies. When it comes to the members, it is limited to two, maximum of 200. Present and the past employees. Whenever I'm talking about the past employees who were shareholders and continue to be as shareholders, which means that I was a past employee of the company, and suppose after my employment I have sold the shares what I've got with me, and again if I purchase the shares, that time there's a break in between the membership in the company, then I will be counted in the 200. If I continue to be as a member even after my resignation, only then I will not be continued in the 200. So it is minimum to maximum 200. And what type of people can be members in a private limited company? Any individual or any person, or any body corporate. Any individual or body corporate. When I talk about body corporate, what you have to remember is whichever has a separate legal entity existence. And Companies Act has specifically defined what a body corporate is, and they've excluded. See, there are societies. Societies are registered under the society's respective state act, and they are also treated as a separate legal entity. However, specifically, certain type of societies are. Am I audible, Rishiba? Okay. Thank you. Thank you. Okay. Yeah. See, this Agile Pro, earlier when Spice forms were there, it was called as Spice 32, 33 and all, no? Similarly, after it became Spice Plus, Agile became Agile Pro. There's nothing difference in that because it's a web-based form, it's considered as a Agile Pro. Okay. See, INC 9 is a declaration, INC 28 is a E form. Why is this not getting closed? Right. So, this is what is the members is limited liability. to the extent of unpaid share value, perpetual succession, you people know what is that. So index is compulsory when the number of members becomes more than 50. I told you what an index of members is. You will be maintaining your members register in MGT1, and MGT1 you have index, which is like your members register. And if you have having more than 50 members in your company, in that case, maintaining an index becomes compulsory. Minimum number of directors is 2, maximum number of directors 15. If I want to have more than 15 directors, it can be a private limited company or any type of company. If I want to have more than 15 directors, I can still have by passing a special resolution. Okay, paid up capital, there is no minimum criteria for paid up capital. Prospectus, issue of prospectus is prohibited. Okay, minimum subscription not applicable. I've explained you all this. Coming to a public limited company. So the incorporation for a public limited company also will remain the same. Whatever I've explained you so far will remain the same even for a public limited company. The only condition is where I said minimum 2 directors, it becomes 3 directors, and where I've said minimum 2 members, it's becoming 7 members. Apart from that, all the documentation, the procedure will remain the same. Okay. So incorporation for most of the companies, it is the same only. Say let me finish the incorporation process. Where for private limited company, I've told you, for public limited company, the only difference is the number of directors and the number of members. The remaining procedure will remain the same. For 1% company also, it is Spice Plus form only right now. And talking about Section 8 companies, whenever Section 8 companies, earlier what we used to do is we used to apply for license separately in Form INC 24. After we get the license, we used to, because we apply for name, we apply for license, and then we apply for incorporation. Earlier, this is what used to happen. Now, what has happened is, privileges of private limited company, I will be explaining after this public limited company. Okay. So, where did I stop? Section 8 company. When we talk about Section 8 companies, earlier we used to get a separate license and then we used to continue with the incorporation process. But now what has happened is, the license, applying for license separately has been taken away. So you, at the time of incorporation itself, even license will be given. Okay, so the process will remain the same, but few particular details that you have to enclose when you're talking about Section 8 company is, whenever you're drafting your object clause, you have to make sure that it is only for charitable purpose. You have to ensure that no dividend distribution clauses are mentioned in the articles of association, and minimum 2 even in the Section 8 company, it is minimum 2 directors and minimum 2 members only. And few extra attachments like source of income. For example, if you're going to start your Section 8 company, what will be the source of income? In what all ways you will be getting your income? So the early a source of income should be given. Kavita, earlier we used to have a separate approval where we used to make an application to regional director RD for Section 8 license. Even though we say regional director, ROC was only approving it. But then in the book, it will be written as CG approval. But ROC office only used to process that also. So earlier, after the name is approved, we used to get a license. That was the separate approval. Now the separate approval is taken away. You need not apply for license separately. Spice Plus form itself will facilitate you to get your license. So you can directly apply. However, whenever you're applying, whatever you used to keep for license attachments, those attachments should form part of your Spice Plus form. Like the source of income, most of us will say we'll get it through donations. Through donations only we'll be getting it, or the initial capital. And then what will be the proposed for the next 3 years? What will be the proposed income and expenditure statement? What is the proposed assets and liability statement? So all these things will normally be there in the attachments of Section 8 company. Apart from that, the normal attachments, whatever is applicable to a private limited company, will be mentioning it in the Section 8 company, and it will get incorporated. When we talk about a Nidhi company, the incorporation process for a public limited company and a Nidhi company will remain the same. Nidhi company is also a type of a public limited company where minimum 3 directors, minimum 7 members, and the minimum capital criteria here is 5 lakh rupees. So to start a Nidhi company, the minimum capital requirement is 5 lakhs. About Nidhi companies specifically, I will be explaining you in some time after I tell you the privileges of a private limited company. Okay. So what will for Nidhi companies, apart from that, you will keep few more declarations that I will only accept deposits and give loan only to my members. I will follow the guidelines that are given in the Companies Act. So few 2-3 extra affidavits and declarations are given. Apart from that, the incorporation process remains the same. Coming to a producer company, for starting a producer company, minimum 5 directors are required and minimum 10 members are required. And here you will keep few more extra information like a producer certificate. Producer certificate is normally to state that yes, he is a producer as defined under section 581B of 1956 Act, because for producer companies 1956 Act is only applicable, 2013 Act is not applicable. Okay, this is as per section 465 subsection 1. So for producer companies only old act is applicable. So minimum 5 members, minimum 5 directors, 10 members, and the incorporation process remains the same, where you have to keep a producer certificate saying that yes, they are producers of the company, and you have to also keep a declaration from a professional who will normally say yes, the provisions of Chapter 9A of Companies Act 1956 has been duly complied with, and few more affidavits you will keep, and thus your producer company will. In all these cases, for all 10, in case of 10 members, all 10 should have a digital signature. In case of public limited company, all 7 should have a digital signature. Okay. So this is how you normally incorporate a company. Incorporation process is the same. If you know how to incorporate a private limited company, it is just the same apart from the minimum criteria. Here and there, little changes will be there, but the process will remain the same. Okay. So what is a public limited company? Now coming to what is displayed in the screen. What do you mean by a public limited company? A public limited company standard definition, which is not a private limited company, and the minimum capital criteria has been omitted, has been taken away now. Okay, provided that a company shall be a subsidiary of a company, not being a private company shall deem to be a public limited company. Okay, which means that a subsidiary of a public limited company shall be treated as a public limited company. This is what we are saying. Okay, and the minimum when we talk about few items like minimum number of members, it is 7. What is the purpose of registering a public limited company? See, a private limited company will normally mobilize its sources of funding from the promoters or the relatives of the promoters or from the friends of the promoters. There will be limitation on the funding. The main purpose of registering a public limited company is we will get more funding. We can go to public at large and we can ask for more funding. So that is the main purpose, and looking for expansion plans for growing your business. This will be the main purpose of registering a public limited company. You can only public limited companies can list their securities, so there's a possibility to list, and you can trade freely by just by click of a mouse. I can just transfer my shares to someone else, or I can buy some shares, which means that the shares are easily easily transferable, unlike like a private limited company. And even two body corporates, even in case of private limited companies, this is possible, where even two body corporates can come together and they can start a public limited company. Few characteristics: board of directors, minimum 3 board of directors. Again, limited liability, number of members 7. We've seen perpetual succession. Coming to financial privacy. Financial privacy, compared to any other type of companies, the financial privacy is very, very, very limited when it comes to a public limited company, because here we are not only displaying or filing our financial reports only with the ROC, but we are also filing with the stock exchanges. And there are many places where a public limited company has to disclose its financial statements. So when it comes to financial privacy, compared to any other company, public limited company has very less financial privacy, because they'll have to disclose it in various forums and websites. Okay. Coming to 1% companies, a little bit about 1% companies. Okay. So before that, I'll just see the chat box. If any questions which are related to whatever we've covered, I will try to answer them and then continue it. Okay. I'm seeing the chat box. Before Private limited company, independent director appointment is not mandatory. For Section 8 company, independent director concept itself is not applicable. So when you talk about independent directors, and for producer companies also it is not applicable, independent directors. So when we talk about public limited companies, only independent director becomes mandatory and will be applicable. Okay. And any other? See, they have incorporated at that time only, but how will they have assets and liabilities? So most of the time what is happening is people who are doing their for Section 8 companies, someone has asked, now only they are starting how they will have assets and liabilities. This is applicable to people who are doing NGO related activities as a trust or a society, and on a later stage they would like to get converted as into a Section 8 company. When you are a newly starting Section 8 company, earlier you don't have a trust or a society. In that case, assets and liability statement still should be given, but you will put nil, 00, and you will be submitting it. So that is what with assets and liability statements. And the public company and public sector companies are basically, most of them are government companies where the ownership will make it different. Okay. If the majority of the stake is with the government company, now we normally refer it to as a public sector company. What is the limit for maximum number of members in a producer company? Durga, there is no, when it comes to the minimum, it is 10, maximum, it is unlimited. Just like a public limited company, it is unlimited. In a private limited company, minimum members are two. They can themselves be the directors too. Obviously, yes, that is a practice how Sahana, that is how the practice is. They only be the directors also. They can be. See, I would normally prefer you studying from the study material only. Best book, if you ask me. And subs. Okay, in case of a company, incorporation of a company where any of the subscriber of the MOA and AOA is signing in a place outside India. MOA and AOA to be filed in INC 32 in the respective formats without filing INC as a physical form. Okay, very good question. I didn't cover about foreign subscriber. No, I will explain you how to incorporate a company with a foreigner, foreign body corporate or a foreign subscriber. I'll explain you after I see if any other questions are there. Very good question. Nominee shareholder, why is it permitted? Nominee shareholder, I'll tell you. Okay. I'm keeping the chat away. Let me explain a little bit. So there was a good question which was asked. Suppose if I'm incorporating a company with Indian nationals, I'm collecting these three different types of proofs, which is like the PAN card, ID proof, and the address proof, and I'm incorporating the company. And it is all EMOA, EAOA. Suppose if I'm going to incorporate a company with a foreign individual or a foreign body corporate, in that case, how will I, what kind of proofs are required and how will I sign the attachments? So let's first talk about foreign individual. Whenever I'm going to start a company with a foreign individual, PAN card is non-mandatory. So apart from PAN card, we will be getting his citizenship card or his driving license or any other ID proof that is given by that particular government. Okay. First, I will be collecting that, and for DIN, for applying DIN, I will be using that citizenship card or something, whatever it is. And apart from that, I need is ID proof and residence proof, which will still remain like the passport of that particular foreigner, passport copy, and the bank statement of the person. And whatever proofs, irrespective of whatever country he is belonging to, whatever proofs he is sending, it has to be sent. Uh, it has to be notarized or apostilled. Notarized, there are certain type of countries where apostle is required, and there are certain type of countries where notarization is required. So both notarization and apostle normally refers to giving more authenticity to that particular legal document. Okay, so because we will be you know, there is a place called as Geneva where most of the countries go and they do trade agreements, they sign trade agreements. So there is a lot of conventions they sign. So based on these conventions, based on few type Commonwealth countries are together. So what do you mean by Commonwealth countries? If you remember, they used to say in the past, the sun always rises in England, okay, or in the British. Why they say the sun always rises only there? Because whenever the sun rises, wherever the sunlight is falling first, that place used to be the territory of the British. Okay, because British conquered most of the parts of the country of the world. So wherever the sunlight falls, it is their colony only. So after a particular stage, they started to leave all countries, like even British left India and they went. And all these countries, in order to have some good bonding between everyone, they started to become a Commonwealth countries. Okay, so that is why Commonwealth games also we play. So there are certain type of countries which are part of these Commonwealth countries where apostle alone is required. For other type of countries, notary is required. So they've made classifications like this. But basically, why notary and apostle? To give more authenticity to the legal documents. Okay. So whatever documents he is sending, whatever proof, the citizenship card, the passport copy, the bank statement copy, everything should be apostilled or notarized from that particular country, or from the Indian embassy you have to get it. After he sends it here, we will prepare all the documents, and in case where it is a Section 8 company, and in case of a for Section 8 company also, I didn't say. So for Section 8 company and for companies that are having a foreign national, it will be a physical MOA and AOA copy. Okay, it is not an EMOA and EAOA, it is a physical MOA and AOA copy. So you will prepare it in a normal, in a Word document, you will convert that into PDF and you will send it to him for signature in the subscriber sheet. So wherever he is signing, again in that place also, notary and apostle is required. You will give it and you will attach this physical MOA, physical AOA in Spice B form and you will submit it. So this is how you basically incorporate if it is a foreign subscriber. What is it extra? What is done? It is physical MOA and physical AOA, all the documents, wherever he is signing, just remember it has to be notarized or apostilled. Coming to foreign body corporate. So whenever there's a foreign body corporate, if it can be an Indian body corporate or a foreign body corporate, first the particular body corporate should authorize to open a to invest in another company. Whenever a body corporate is buying shares, it will be like an investment for them to invest in the shares of the newly incorporated company. So first a board resolution copy for approving the investment. Okay, board resolution copy for the investment. The second one is authorizing someone to act as an authorized representative, to authorize someone to act as an authorized representative to sign all the documents on behalf of them. Okay, so the authorized representative board resolution copy. Apart from that, the authorized the certificate of incorporation, because for a body corporate, what is ID proof and address proof? The certificate of incorporation is only their ID proof and address proof. So the certificate of incorporation of the body corporate, along with the authorized signatories, PAN card, Aadhaar card, the ID proofs and the residence proofs, which are normally applicable. Okay, so all these things, and whenever it is a foreign body corporate also, the apostille and notary is anyways mandatory. Okay, the digital signatures will be taken for the foreign for foreign body for foreign nationals also. Digital signatures are required. for the foreign nationals, see, for not for signing EMOA, EAOA, we need not, because there is no EMOA, EAOA. However, when he is going to have a DIN, whenever a person is going to possess a DIN, every year you will have to file your KYC documents. So anyways, you will have to take a digital signature, even though he's a foreign national. And in case of a body corporate, the representative of the body corporate should get a digital signature, and that digital signature will be used. Okay, so this is how you will incorporate a company when there are foreign body corporate or foreigner involved. And also some other question related to this particular topic. In case of incorporation of company who are having more than 7 subscribers, MOA, AOA shall be filed. Correct. Correct. Because even though there are INC 9, anyways, we are affixing. See that what I feel is what you're saying is correct. But what I feel is even MOA, AOA should become accessible for more than 7 people. But as on date, why I'm saying, because for example, I'm incorporating a producer company. My INC 9 will have 10 member details, and I have to affix all 10 member digital signatures. Anyways, I am taking digital signatures for all 10. Then MOA, AOA also should facilitate for more than 7. But yes, as on date, whenever I'm having a foreign subscriber, whenever it is a Section 8 company, and whenever I'm having more than 7 subscribers, it is still physical MOA and physical AOA. Good, correct. And for registered office address, what are the documents needed? Fahima, good question. For registered office address, totally. See, whenever I'm talking about registered office address, the classification goes like this: whether the address is owned by the director, whether the address is taken on lease by the company, whether the address is owned by the company itself, or whether the company belongs to some other person taken on lease. So there will be classifications like this. Based on the classification, the proofs will differ. But two proofs are mandatory, which is the address proof and the utility proof. When I talk about the address proof, it can be a sale deed or a rental agreement or a lease deed or a property tax receipt. Okay, any other proof, a government proof saying that he is the owner of the premises or the premises belongs to him. The second one is a utility proof. One is address proof, one is utility proof. The utility proof can be your gas bill, your EB bill, your water bill, your landline bill, any one of these bills. These will normally be as the registered office address proof. And whenever I am not keeping the rental agreement or the sale deed or the lease agreement, whenever I'm keeping a property tax receipt as address proof, and whenever I'm going to keep my electricity bill as utility proof, then I have to keep also one NOC, no objection certificate, from the owner of the premises, saying that I do not have any objection in having this premises as the registered office premises of the company. Because there is no rental agreement or a lease deed, then how will I know whether the owner has given consent or not to me? So that is why whenever I'm going to keep any document like your property tax receipt apart from rental agreement as residence proof, then I have to also keep a NOC. Okay. So now let's see what is a 1% company. 1% company, few certain characteristics of 1% companies. Okay. Do we need to make rental agreement between owner and director or owner and the company? Owner and the company. Director will sign on behalf of the company. Okay. Company is a separate legal entity. All agreements to be in the company's name only. There are any limits for companies where INC 32 fee is not applicable? The INC 32 form fee, it is zero fee only, irrespective of. See, basically up to 15 lakhs, but there is stamp duty. Up to 15 lakhs, there is no stamp duty on your MOA. However, more than 15 lakhs, for every 1 lakh, 2,000 rupees will be the stamp duty that will be levied. For every 1 lakh, 2,000 rupees. Or in the rules, it will be written as for every 10,000, 200 rupees. For every 10,000, 200 rupees. That is what I'm saying. For every 1 lakh, 2,000 rupees. Easy to remember. Okay. So I'm just continuing with 1% company. I'm keeping the chat box away. Okay. So whenever I'm talking about a 1% company, so 1% company was introduced in India only in 2013 when the 2013 Act came, which means with effect from 1st of April 2014. However, the discussion for this was happening since 2005. JJ Irani committee was formed to discuss, because they want to, government wants to make all type of entities more systematic. So sole proprietaries also have to be regulated. So we have to give them also an option to get into a regulated framework. So this 1% company concept was introduced. Even though it was introduced in India in 2014, it doesn't mean that it was a new concept. It was an existing concept already in existence in UK, Australia, Singapore, Pakistan, China. All these countries already had this concept called as 1% company. Even Pakistan has had this concept. So we have introduced, we have adopted it in 2014. Okay, the concept here is one member who will also be as the deemed director of the company. One member, but like 15 directors, you can have like a private limited company. Okay. Such company cannot carry out non-banking financial activities. So if I want to start an NBFC company, then then a 1% company cannot do NBFC activity. Okay, no such company can get converted voluntarily into any other kind of company unless 2 years has lapsed. So for example, I have incorporated this 1% company now, and after like few months, I think I can get converted into a private limited company itself. In that case, I will be not allowed to get converted into a private limited company until 2 years have lapsed. However, within the 2 years or even after the 2 years, if the turnover and the capital criteria is lapsed, in that case, I can get converted. What is the turnover and the capital criteria? Turnover is 2 crores of turnover, or if I exceed more than 50 lakhs of paid up capital, then even though it is within 2 years, I will still have to get converted into a private limited company. And talking about 1% company, few things that you have to remember is nominees. Okay, when we talk about nominee, it is mandatory for a 1% company to for the member of a 1% company to say who is nominees at the time of incorporation itself. Along with the 1% company, that person's proof, we will also keep the nominee proofs. Okay, so nominee details are mandatory. And see, who can be only an Indian citizen and a resident can start a 1% company or be a nominee. Okay, so who can be a nominee? Only, so which means that FDI is not allowed in 1% company. What do you mean by FDI? Foreign person is investing in India. So FDI is automatically prohibited when it comes to a 1% company. Similarly, even in a sole proprietary, FDI is not allowed. Okay, so only an Indian citizen and an Indian resident, both to be satisfied, citizen and resident, can start a 1% company. Only one person at a time, and he only one person at a time, and he cannot be a nominee. So what they are saying here is the same person cannot be as the member and the nominee. Okay, so this is what they are saying. The same person cannot act as a member and the nominee, and a minor cannot be a member or a nominee in a 1% company. A minor cannot be. So these are few points that you have to remember when you're studying about 1% companies. The remaining all, most of the things will remain the same. Okay, liability is still limited. So this is the main advantage of starting a 1% company. When I'm doing business as a sole proprietor, it becomes unlimited liability, but here it is only limited. Separate legal entity concept is there. Okay. So this contract is applicable even in a private limited company. The company can enter into a contract with the directors of the company. Similarly, even though the 1% company, for example, I am the owner of the 1% company, I am the member of the 1% company. Still, I can have a, since I am also a deemed director in the company, I can have a contract with the company. For example, I have a 1% company. For example, I have a 1% company which is doing some business consulting work, and I am a practicing company secretary. So that 1% company, which is a business consulting firm, can get my services, my certification services as a practicing company secretary, and the company can pay me some fee in that regard. So even though that firm is also belonging to me, I can have a relationship like this and render my services. So this is an example. So like that, I can have contracts with other 1% companies also. So I've specifically said what, talking about the specified formats for registering to be adopted. Like I've told you, there are specified formats which are already given for the MOA and AOA in the Companies Act itself. So those are called as tables. In tables, there are formats which are given. So here, when we talk about tables, see here, I've given for memorandum of association, based on the type of company, the type of table will differ. From table A to table E talks about the different types of companies like limited by share, limited by guarantee having share capital, unlimited companies having share capital. Based on the type of company that I'm going to register, I have to adopt that particular type of table. And similarly, AOA also has specified formats from table F to table J based on the type of company, again limited by share, limited by guarantee, unlimited companies. I will be adopting that particular table. So these are few things that you will have to remember. I'm just stopping my screen sharing. I'm just saying if any questions have to be answered, and then we'll continue further. Why a nominee is required in a 1% company? Very good question. Suppose if the 1% company, that person dies, there should be an immediate successor who is going to take care of this company. So in order to ensure the smooth perpetual succession of the company, it has become mandatory to have a nominee for a 1% company. And registered office can be a rented place, Kavita. How to get funding and funding? Not now. Do we have any rental agreement to owner? Small company and 1% company are not the same. Small company is a private limited company. However, they have, see, small company and a private limited small company is a private limited company, but the turnover and the capital criteria is same like a 1% company, but both are different concepts. Okay, and if you attend all my classes, I will give you all my notes. For Mohana, if capital limited is capital limit for, there's no capital limit for 1% company, just like a private limited company. I explained what is the contract, Kavya. Contract between 1% company has less documentation involved, nothing like that. Actually, it is the same, because even for a private limited company, there's no much documentation. Everything has become into the form itself. But because for starting a private limited company, anyways, I'm doing with two people. For 1% company also, I am doing with one nominee and one member, again 2 persons. So documentation will remain the same only. But for exam perspective, if you want to write, you can still put, yeah, compared to a private limited company, it is easy to form. Only for exam perspective, practically you're doing, it would be more the same only. I'll share you my email ID. If you have any questions, you can mail me. Because phone number, I will not be in a position to answer all the calls. So I'll phone number Muhammad Asif. Why is FDA not allowed in OPC? Why it is not allowed? Let's see what is what can be the reason. See, if I'm a private limited company or a public limited company, I still do some considerable amount of business. Okay, the business expansion or the level of business that I'm going to do as a one person, as a private limited company or a public limited company, will comparatively be good when it is compared to a 1% company. Tomorrow, if the 1% company is going to get all foreign investments and foreign investments and ECBs, everything or loans, everything I'm getting, and if this 1% is not able to repay, it will create a black mark on the country. Okay, so until you reach a certain level, of doing good business, we will not allow you to allow you to get foreign funding. That should be the reason, is what I am thinking. Okay, and see, Arivuli Ravindran, uh, lifting of corporate wheel can only happen only if it can be proved that the directors have misused the funds, or the directors have willfully or due to negligence, they have uh, the funds have been not used properly. Only then the creditors can lift the corporate wheel. Okay, or request the government to lift the corporate wheel, or lifting corporate wheel irrespective of whatever type of company is not possible. That it should be proved. Okay, NBFC company is a public company or a private limited company? Very good question. NBFC company can be a public company and a private limited company, both. In NBFCs, there are two types of NBFCs. One is deposit accepting NBFC, one is a non-deposit accepting NBFC. When I'm a accepting NBFC, I have to get registered as a public limited company. When I'm a non-deposit accepting NBFC, I can get registered as a private limited company also, and then and then still continue my business. There are certain type of companies where deposits will be accepted in the nature. I will be explaining in the chapter where we are going to talk about NBFC specifically. There you will understand more. Okay, both, it can be basically both. And uh, can you just sum up incorporation? I've already covered a lot, Eva, so I'm not going to say it again. Why is FDA not allowed in producer companies? Sir, is FDA allowed in producer companies? Okay. See, FDI Malavika Suresh, FDI is prohibited in agriculture. If you remember, the limitations which are there for FDI, it is prohibited in agriculture, it is prohibited in real estate, it is prohibited in print media. So there are certain areas where FDI is prohibited. If the producer company is into purely agricultural activity, in that case, FDI is prohibited. However, in my object clause, if I'm going to have horticulture, if I'm going to have sericulture, if I'm going to have fishery, in that case, I can still get. Okay. So, for example, whenever I'm going to do paddy, it is called as agriculture. For example, if I'm going to do potatoes, it is called as horticulture. Okay, so there's a lot of differences. When you get into the field, you will be able to understand the difference. If my only agriculture is prohibited, so if my producer company is not into agricultural activity, however they're into other type of activities, then however it is always advisable to go to approach RBI once, inform them once, and then start getting the FDI. At that case, I think FDI can be taken. Topic is going as well. List of things. See, out of your interest, how you can see is just type FDI master circular latest RBI. Just type like this in Google. You will get the master circular which comes every year. If RBI releases it. in which they have the new set of FDI rules in it, in which what is prohibited is also explained. Okay. Is there any other question? Yeah, filing is there. See, this DPT3 form, DPT forms are all there for deposit only. Am I audible? Okay, thank you. So, it's 1 hour since we've been speaking. So we'll just take a quick break for 2 minutes, and then we'll again continue. Okay, a quick break for 2 minutes, and then again we'll continue. Okay, I am closing my video and my audio. Even you can get fresh, and you can come back. We'll start. Oh, this is a big question. Kabal, Danikal Kabal, who produced a company at 1956 applicable. So the question is, registration is the same as Spice Plus. Yeah, it is same as Spice Plus only. Physical AOA need to be given. So we need to file no EMOA, physical MOA. So physical MOA, Spice Plus only. Okay, fine. See, you most of you people would have been going for training. You will be learning, doing practically, and then you would be learning. And some of the students would not be going for training. They are first studying, and then they would have thought they are going for training. So let me show you Ministry of Corporate Affairs website basically. And whenever there's a new update or something, how do you actually check it? Why am I saying this now is because now we are going to discuss what are the privileges for a private limited company. So whenever we talk about what are the privileges of a private limited company, uh, is it not clear? Adhinder, am I audible? Is it clear? Okay. No, I don't do tax loss. Yeah, thank you all. Okay. Let's start. So why am I saying this? Because now we'll be seeing what are the privileges of a private limited company are, because this is also an important question. So whenever we are going to see what are privileges of a private limited company, first we should know what does the provision normally say and what is actually exempted. So for us to know what is the provision actually says, we have to know what is the latest provision is. So whenever you may have a Bar Act with you, but that Bar Act, for example, it was printed some other day. Today there is a notification in section 135 in schedule 7 where they have included few more provisions apart from the dependence of the war dependents. CSR contribution should be given even to the armed forces, police. They've added few people. Section in schedule 7. So new amendments are happening every day. So if you want to know what is the latest update, then you should have a ebook. So Ministry of Corporate Affairs website has given you an ebook. So what we'll do is we will simultaneously open this ebook and we will simultaneously open what is the provisions that are this. I am just telling you how can you study. When you have a doubt, you yourself can have this ebook in the side and you can have what is the privileges. So you can compare both and you can see uh, what are the privileges of private limited company. Okay. Before that, private limited company, what understanding you should have, basic understanding you should have about it is, this is a closely held company. Friends or relatives of known parties come together. Known fundings are coming to it. Yeah, MCA book only. So known parties are coming together and they are going to start this particular company. So, for example, there is a son and a father who are directors in the company, or husband and wife who are directors in the company. Issue 7 days notice before the meeting. So they are in the same house, but then still issue notice. There are certain provisions like this, which these are also still okay, but then uh, more like when we are talking about funding, bringing in new money, there are a lot of restrictions which are there. So since it is a very closely held company, ministry has felt let's relax it. This is the background behind giving few privileges to private limited companies. Okay. Now I will start sharing my screen. I will show you how to see the ebook, and we will also discuss what is the privileges saying. Simultaneously, we'll see both. Okay, I'll share the screen now. So this is how basically the website will look. See, today I told you, no, there's an amendment which is in Schedule 7 about CSR. So all new notifications keep coming here, and your ebook will be a little down. Ebook on Companies Act. Okay, this is what it is. Just click on this. So whenever you want to see any new, so you need not carry a physical bar act with you. There is an ebook. This is also prepared in partnership with our institute. Okay, our institute in partnership with the Ministry of Corporate Affairs is maintaining this. So this is a very reliable source of taking. Okay, so let's keep this in one side. Let's keep it here. Let's open the privileges here. So now let's quickly see what are the privileges that are normally given to a private limited company and what is the particular section that is relating to. Okay, so let's start from here. Exemption or modification or adaptation. Is everyone able to see the screen? Are you able to see the screen? Yeah, great. So section 2 subsection 40, which is talking about the financial statements. Okay, so for the provisions of the following shall be substituted, provided that the financial statement with respect to 1% company, small company, dormant company, and a private limited company, if such private limited company is a startup, may not include the cash flow statement. So, whenever you talk about the financial statements normally refers to your auditor's report, your balance sheet, profit and loss account, your cash flow statement, your director's report, everything put together is basically like your annual report is your financial statement. It has to be signed by the chairman of the company if authorized by the board, or any two board of directors, one of whom shall be a managing director if any, CEO, CFO. So many things are there. Okay, so this is what is financial statement is. So what they are saying here, in case of a 1% company, small company, dormant company, and a private limited company, if such private limited company is a startup, may not include cash flow statement. So when we talk about small company is also a private limited company, but your turnover and paid up capital limit is less. So those type of private limited companies, small companies, and any other type of private limited companies, which is a startup company. So what is a startup company? We'll see that later. Okay, need not have a cash flow statement. So this is the first exemption. Okay, this is the first exemption. Going to the next one. Section 2, subsection 76 shall not apply with respect to 188. So what are they saying? Section 2, subsection 76 shall not apply with respect to 188. So what is section 2, subsection 78? Anyone who knows what is section 2, subsection? So to know that, related party transaction is one. Go to section 2, click on section 7 and go to 78. Remuneration. So section 78 talks about remuneration. Remuneration means the money or its equivalent. Okay, so are you able to understand? Section 188 is a related party. Understand very well. Section 188 is a related party, and section 2 subsection 76 which is defining who a related party is. So here what they are saying is subclause 7 of section 2 of subsection 76 is not applicable. So what is subclause 7 saying? Any person on whose any person on whose advice. So whenever you're defining who is a related party, they're specifically saying this particular person can be omitted. Okay, so in defining who a related party is, they're saying these persons also will not be treated as a related party. And second thing, talking about a private limited companies, most of the related party transactions are also exempted here. Why related party transactions are specifically restricted is because uh, when it's a company, the public funding is there and it is more, and the related party should not misuse their powers to take illegitimate advantage over the company. However, when it is a private limited company, their funds are only invested in the company. So there is no, so if they are taking the funds or if they are handling the funds, it will not affect anyone at large. It will not affect public at large. So that is why related party transactions are basically given exemption. So any body corporate, so this is what is basically explained in this. So body corporate, which is a holding or a subsidiary or associate company, a subsidiary or holding to which it is also a subsidiary, an investing company or the venture of the company. For the purpose of this clause, the investing company. So all these persons, the holding company, the subsidiary company, the associate company, all people will not be treated as a related party. Yeah. Thank you, Thomas. Juhi, yeah, everyone, thank you. So what they're saying here is most of the holding companies and group companies, all these people, what kind of arrangements they are normally having here is there will be a holding company which is a public company or a listed company, and they will have all the subordinate companies which will be like a private limited company, and these group companies will be working within themselves. So for the purpose of related party transactions, they have removed all these holding subsidiary associate companies from the definition of related party. Okay, going to the next one is section 43 and 47 shall not apply where memorandum or articles of association of a private limited so provides. So what is 43 and 47 talking about? Okay, most of the time we will not be able to understand these provisions, the privileges, because it is very difficult to understand what is this section 43 and 47 all speaking about. So 43 is basically talking about share capital of a company limited by shares shall be of two kinds. So the entire section, okay, where will depend basically the act is saying it'll have equity shares, preference shares, it will have differential voting rights and all these things. However, if my articles or if my memorandum is having it in a different way, then whatever my articles and memorandum says only will stand. And section 47 talks about voting right. Every member of a company limited by shares and holding equity shares shall have voting right on every resolution placed before the company. His voting on the, so they're talking about voting rights. So the provisions that are related to the types of shares and the voting rights. So 43 and 47 write and keep. It is types of shares and voting rights. Again, it is not applicable to a private limited company. So coming to the next one is section 62. So when it comes to section 62, we are talking about further issue of shares. Okay, we are talking about further issue of shares. It covers rights issue, it covers ESOPs, it covers preferential allotments. So all these type of issues are covered in section 62. In section 62, there are few subsections like subsection 1, subsection 2, all are not applicable to a private limited company. The following provision shall be inserted, provided that notwithstanding anything contained in section so and so, in case 90% of the members of a private limited company have given their consent in writing or in electronic mode, the period of lesser than those specified in the subclauses shall be applicable. Here what they are saying is offer letter has to be given and the offer letter should be open at least for 15 days. So there's a specified time period that is given whenever you issue an offer letter. So if it is a private limited company, you need not wait for 15 days because you know who the investor is. People will immediately invest in the company. So that is why the time, if the 90% of the members agree, the minimum time period can be waived off. It can be taken away. So this is what in section 62 it is talking about. And also when it comes to issue of shares, the special resolution, you need not pass a special resolution. Ordinary resolution is sufficient. So whenever we're talking about private placement and preferential allotment, yeah, my charge is getting low. I'll charge it. So whenever I talk about private placement and preferential allotment, what is the difference between a private placement and a preferential allotment? Does anyone know what is the difference between private placement and preferential allotment? Just type your answers and keep. I'll charge and come. Preferential allotment is only for few people. Private placement will allot whom is deemed fit, but it preferential public applies. Private placement is for known persons, relatives, friends, and all. Private placement is for more members, but preferential allotment is for particular class of people. Private placement invites only to specific person. Private placement means only few people. Private placement only. Okay, 1 second. Wait. It's not that way. Private placement is for related party. Preferential allotment involves existing shareholder. See, let me explain you. Let's talk about 62 first. Okay. Let's talk about 62. Am I audible? Pooja? Audible? Okay. Thank you. See. Okay. Preferential allotment, let's break it into three. What they're saying, the first one is rights issue, which is existing shareholders. Whenever it is existing shareholders, I follow 62, which is rights issue. The name itself is different. Whenever I give it to the employees, it is called as ESOP. The name itself is different. Whenever I give to any other party, apart from mentioned in the above two, it is a preferential allotment. Okay. So preferential allotment is basically to any other person. And what is section 62 speak about? Further issue of shares. Further issue of shares. Coming just like that to 42. 42 talks about private placement. So what does private placement basically talk is issue of securities. Issue of security. Okay. Okay, I'll repeat again. See, section 62 talks about further issue of shares. Section 62 talks about further issue of shares, where the first one, it is talking about rights issue, which is to existing shareholders. Second one is ESOP, which is for the employees of the company. The third one is to any other party which is not mentioned in the first and the second, which is apart from the existing shareholders and the employees. Anything else is called as preferential allotment. Okay, it's for the issue of shares. Just coming just like that to section 42. Section 42 talks about issue of securities to any other to any person. Again, I'm saying 62 is issue of shares. 42 is issue of securities. Securities include share. Securities include share. Now we have a doubt whether we have to allot shares either in private placement or as a preferential allotment. Whenever it is an equity share, you will have to allot only through preferential allotment. Whenever it is any other type of security like bonds, debentures, debt equity instruments, convertible instruments, FCCBs, all these things you have to allot through private placement. So when you have to follow preferential allotment, so preferential allotment is specifically for equity, where private placement is for general security. Then we'll have a question, when private placement is anyways including even equity, because it includes all securities as defined and under section 2 subsection F or something, section 56. I'm not very sure on the section number. So basically, securities, all type of securities, it covers equity, non-equity, convertible equity, debt, everything it includes. So should I follow as per private placement or should I follow as per preferential allotment whenever there is a subsection H? Correct, Shiva, thank you. In that case, whenever there's a specified section, you will have to follow the specified rule. Whenever there is a specified section, you will have to follow the specified rule. So since preferential allotment speaks specifically for equity, you will have to follow 62. So this is what is the differences. This is specifically for equity, this is for all type of securities. Okay, clear? Let's go to the next one. Section 67 shall not apply to a private limited company. So what is 67 first? Restriction on purchase by company or giving any loan by it for purchase of its share. Okay, so what they are saying, section 67 normally restricts. It's obvious that a company cannot buy its own share. Okay, so what are they saying? In whose share capital no body corporate has invested any money, if the borrowings of such company from the banks or financial institution or a body corporate is less than twice the paid up share capital or 50 crore rupees, whichever is lower, such a company is not in default in repayment of the borrowing subsisting at the time of making the transaction under this section. So here what they're saying, a company can buy its own share or facilitate someone to buy its own share, provided whose share capital no body corporate has invested, which means that no body corporate is a member in that company. And when you have taken a loan from a bank or any body corporate which is less than twice the paid up share capital or 50 crores, whichever is less, in that case section 67 is not applicable for a private limited company. Okay, so what is 67 saying? 67 is saying restriction on purchase of shares by the company or giving loan or purchase of its own share. Okay, clear? Going to the next one is section 73, which normally talks about deposits. So what they are saying, section A to subclause A to subclause E of subsection 2 is not applicable in case of a private limited company. So this will normally be whenever you get deposits, you have to maintain these kind of things. You have to intimate it, what kind of forms you have to file with the ROC. all these things, because only eligible companies it is applicable. Private limited companies, since deposits itself is not applicable, all these provisions have become not applicable to it. Okay, shall not apply to a private limited company which accepts from its members money not exceeding 100 percentage of aggregate of the paid up share capital, free reserves, and such company shall file the details of the money so accepted to the registrar in such manner as may be specified. So here what they are saying is, if can a company get loan from its members is the question. So whenever it is a public limited company can get loan from its shareholders. However, it is only like 25%, 35%. There's a limitation. There's a slab rate which is giving. Beyond which, if you get loan beyond 25% of your paid up capital, if you're going to get loan, it will be treated as deposits. Okay, it will be treated as deposits. So as from that day onwards, you have to follow all the conditions that are given by the under the deposit rules. However, when it comes to a private limited company, it is not 25%, it is 100%. Up to 100% of paid up and free reserves, you can still get money from your shareholders, and that money will not be treated as deposits. This is what is the condition that is given here. What is the difference between loan and a deposit? The loan is something which is repayable on demand. Loan, basically you pay interest for the loans that is basically given to you, and the terms and conditions, the repayment is totally different. It is like a debt that is given. Deposit is basically an investment which is made in the company, for which again, yeah, you will get a interest. It's basically you go to a bank, you have an FD. FD is like your deposits. You take a loan from the bank. Both will have interest in all these things, but the difference between a bank loan and a bank deposits is exactly what is. But instead of bank, you're depositing in a company here. Debentures is totally different. So deposits is not a loan, it's an investment. Okay, debentures is, for example, I am a I'm a third party to a company. I'm a third party to a company, and I want to invest in the company. Okay, but I don't want to invest in the equity. I want to give us a loan to the company. So what will I do? How will I give loan to that company? Because if I want to give a loan to a company, I should be a eligible lender. Okay, so I am not an eligible lender because I'm an individual. An individual is not an eligible lender. As an individual, I cannot give a loan to a company. Okay, it's a basic thumb rule. So how can I give loan to a company? Only in those situations I give loan in the way of debentures. So when debentures will normally be issued is when I am not an eligible lender, I cannot give you term loans. In that case, still I want to invest in your company in a non-equity way. Then in way of debentures, I normally invest in your company. There is no slab rate meaning. There's no slab rates which are given for the interest rates that are charged. It's purely on the companies how they normally rate for these debentures and all. And the provisions of, again, the deposits shall not apply to private limited, again from A to E, shall not apply to a private limited company which has accepted 100% the above point what we saw, and it shall also not apply to a startup company where for 5 years from the date of its incorporation, and which fulfills the following conditions, again which is not a subsidiary. So I think you can read this, let me not explain too much. So deposit related sections, most of it is exempted. Okay, going to section 92. Section, what does section 92 talk about? Annual returns. Okay, so specifically they are saying subsection 1 clause G. So what is clause G talking here? Remuneration of directors and key managerial personnel. Okay, every company shall prepare an annual return containing the particulars as they stood at the close of the financial year regarding remuneration of the directors and key managerial personnel. Okay, so shall not apply to a private limited company which is a small company. So small companies need not disclose in their annual return relating to the remuneration that is given to the directors. So remuneration related details need not be disclosed in the annual return exemption. Again, subsection 1, for the provisions, the following provision shall be substituted, provided that in case of 1% company, small company and a private limited company. Here what they are saying, if such private limited company, the annual turnover is signed by the company secretary or where there is no company secretary, by the directors of the company. So normally annual return to be signed by the company secretary of the company, and when there is no company secretary, by any two directors of the company. For all other type of company, a practicing company secretary has to certify the annual return. So the private limited companies, since they are small companies, they need not go to a practicing company secretary to get it certified. They can get it signed by the two directors itself, and they can invest it and they can file it. And a few more points. Section 102, 107 and 109 shall apply unless otherwise specified, irrespective of the section, the articles of the company so provided. So 101, all these things normally talk about meetings, notice, shorter notice and all these things, explain it. So provisions relating to the notice, provisions relating to voting by show of hands, and provisions relating to voting by poll. So there are few exemptions which are given for private limited companies even in this case. If my articles of association say need not conduct poll, only show of hands will be considered, because there are certain type of, if I am voting through show of hand and if it is demanded to do through poll, then whatever I've done through show of hands will not be applicable. I have to redo the election through poll. However, if the article specifies otherwise, similarly for giving notice also, because when you read the particular section, there will be given certain exemption saying that provided if the articles of the company specify so, then you can do it this way. So when it comes to a private limited companies, they can do it all these things. So similarly, what I would normally suggest you to do is cross verify this way. Okay, let me not let me go to your questions rather explaining. Just cross verify this way. What is the difference? What is the section saying and what is not applicable? Then you will be able to link it up and summarize it fast. So this is how you have to normally study when only section numbers are given in the material. Read it from the ebook only. Let me just see the questions what you asked. See, company buying its own share. See, buyback is different. Buying its own share is different. Okay, it's entirely different. The concept is different. In that case, even a public limited company can exercise buyback of shares. Okay, when you talk about buyback of shares, when Anil Ambani and Mukesh Ambani got separated, share values came down. That time, Mukesh Ambani said, "I will do a buyback." But people not ready to give their shares, thinking that Mukesh has some plan behind. Then share values increased automatically. Okay, so basically these are types of buybacks are totally different. Buyback is different and facilitating to buy is different. Buyback is different, surrender is different, forfeiture is different. All have different meanings. Loans and deposits, debentures, we've seen all these things. Kavita, I don't think both are liability. I think deposits will be treated as an investment in the company. Yeah, both are liability. Correct. Deposit rate of interest. Shilpi, yeah, you have to learn the exemptions. That is why I spent so much time on it. They will ask you what are the privileges of a private limited company. Just keep all these things right in your own words. You need not see. You mention, if you can mention the section number, well and good. If you're not able to mention the section number, provisions relating to related party, what is exempt? Provisions relating to deposits, what is exempt? At least write like that, so that, see, at the end of the day, the invigilator who's correcting your paper should be satisfied. Yes, I will make him to go to professional level. That is the only intention. See, if I am going to correct the paper, looking at the paper, I will think if he is going to go to professional level, he is going to spoil the institute name. Let me not make him clear. By looking at it, he's got knowledge. Let him go to the professional level. This is the mindset. So you have to convince the person who's correcting your paper that you know the subject. If you are not able to write the section number, at least write, showcase that you know the subject. Okay. Amit, there is no trick to memorize the section numbers. As and when you keep using the section numbers only, you'll remember. See, few section numbers you already would have been known. So say like section 203, section 235, section 188. Everyone said related party, related party. As and when you keep listening, so that what you can do is you can write few important section numbers, and every day you can just read it once. The more you read it, only it will remember. There's no trick for it. No, no, no. Nominee will not be liable. See, 1% company, why are they coming to 1% company? Because it is limited liability. Even though what OPC becomes insolvent, only the assets of the OPC will be liable. The owner of the OPC or the nominee of the OPC will obviously anyways not be liable because limited liability. Okay, don't forget the concept. Okay, now let me explain you about MOA, AOA, and how to amend your MOA and AOA. Okay, okay. So talking about your articles of association, memorandum of association, articles of association, most of everyone knows it talks about the company's internal functions. Whatever is going to happen within the company is only discussed in that. Like who can be your director, who can be your member, what will be their voting rights, at what time the notice have to be sent, at what time meetings have to be conducted, how much loan you can take, how much investments you can do. If in case of a dispute, how do you resolve it? How do you wind up the company? How do you form subsidiary companies? So basically about investments. So how can you get merged? So how do everything, whatever is going to happen within the organization, you will have it in your articles of association. However, talking about your memorandum of association, it will have the company's relationship with the outside world. It's like in what name do I call you, in what place do I come and meet you, what kind of business can I do with you, how much loan can I give you, how much of money can I invest in your company, who have started the company. So that is when name clause, name clause, situation clause, object clause, liability clause, capital clause, subscriber clause. So there are different clauses. So whenever we are drafting this MOA or AOA, only few things that you have to keep in mind is whenever you draft this, it should not be contradictory to the act. Okay, so act is the superior body below which you should basically design your MOA and AOA. Okay, should not be ultra wise. This is how you basically make amendments in it. Whenever you're going to amend your articles of association, the formalities is very simple. You always pass a special resolution. So whenever you're writing in the exam, you should write it big. Like you call for a board meeting, decide that you have to amend the AOA, then approve the notice calling for the AGM or the EGM, issue the notice, 21 clear days, conduct AGM, make sure the quorum is there. Okay, when you're writing an exam, write all these things. But for me to simply make you understand, whenever you're going to pass, whenever you're going to amend your AOA, you will have to pass a special resolution. Before, after passing special resolution, MGT 14, file it within 30 days, all these things will come. Okay. What is the difference between a special business and a special resolution? What is the difference between special business and the special resolution? Kavita, to your question, if I'm not wrong, 2 directors have to sign. Anyways, I'll cross verify it once. Special is everything except ordinary business. Special resolution 75%. Very good, very good. So you know, very good. Superb. So all the businesses apart from the ordinary business is a special business. Business is basically what we are going to talk about. Resolution is basically what we have decided on that topic. Okay, resolution is the decision that is taken. Business is the topic that we are going to talk. So now I'm saying we are going to discuss on this topic doesn't mean that we have decided what we are going to discuss. Okay, so that is basically resolution, because people would normally misunderstand special business, special resolution, both are entirely different concepts. So special resolution, AOA to be amended. So AOA amendment is very easy. Keep it aside. Let's come to MOA amendment. In MOA amendment, each and every type of clauses, the name clause, situation clause has different ways to amend. Let's see that simple. Okay, we'll make it simple and we will simply see what is the procedure. Okay. Sachin has a doubt. For Mr. X is the owner of ABC company. He wants to appoint an auditor. He can appoint his friend who is a chartered accountant. Yes, he can appoint. Yes, he can appoint. How to know what are the sections of the Companies Act still applicable? See, only to producer companies 1956 Act is applicable. Most of the sections have been taken away. Yashwanti, that I don't know. Institute only will decide. Okay. Okay. Don't we need to issue certificate before commencing business? What certificate? What certificate are you referring here to? See, you can have even your friends has the auditor, no problem. And only for those class of companies, there are certain class of companies like private limited companies, 20 crores paid up capital, or having loans of so much, public limited companies. So only for those class of companies, that 5 year cooling period and all these are applicable. For small companies and all, there's no cooling period at all. And who, even your friend you can have as your auditor, but that after only for 5 years. This is only the condition. Internal auditor and statutory auditors both are different, entirely different persons. So internal auditor, for example, I have an accounts department in my company, and they're taking care of all the accounting transactions whichever is happening in the company. However, all these people are BCom graduates. I need someone who's a chartered accountant who will actually oversee whether everything is being maintained properly or not. So I'll have an internal auditor within my company to see the day-to-day transactions, whether all the accounting formalities, everything has been done properly, accounting standards have been adopted or not, is everything properly maintained, is an internal auditor. Okay. However, who's also a chartered accountant, but a statutory auditor is a person who is an external party who will come to the company only once in a year to check. This person, this external auditor is basically a representative for the government. He will come, he will check everything properly is happening or not, and he'll report it to the government saying that, yeah, they are doing work properly only. This is what is their profit this year, so much tax they have to pay. So external, this is the difference between internal auditor and external auditors. See, Section 8 company only, there's no Section 25 company anymore. Earlier, under 1956 Act, we used these particular companies, these not-for-profit organizations were discussed in Section 25 of 1956 Act. So we used to call it Section 25 companies. Now, Section 8 talks about non-profit organizations. So Section 8 company. So what is Section 25 of 1956? Only now we are saying Section 8 of the Companies Act. Okay. I'm not able to understand. How can a CS act as a statutory auditor? Statutory auditor means chartered accountant who is a member of the Institute of ICAI. Okay. Please list the forms to be. See, whenever you're going to amend your articles of association, only one form, MGT 14, to be filed within 30 days from the date of passing the special resolution. Okay. Now I'm coming to MOA. Name clause, situation clause, object clause, liability clause, capital clause. Subscriber clause cannot be amended. So 5 different clauses, how to amend, quickly we'll see. Okay. Okay, concentrate. Starting with name clause. So name clause can be basically, whenever I want to change the name of a company, I will first call for a board meeting. The board of directors will decide, yes, we will change the name with shareholders approval. Then I will call for an EGM, issue notice calling for the EGM. Then the EGM is conducted. In the EGM, I get a special resolution passed. I will file from MGT 14. After that, sorry, before I call for the EGM, as soon as my board meeting is over, the board of directors decide, let's change the company's name. Before I call for the EGM, first I will apply for that name in form run, reserve unique name. And after the name is approved and reserved, then I will call for an EGM. Okay. Why after I get the name approval, I should call for the EGM is because suppose I call for the EGM, calling an EGM is not a small work. For example, in my company, there are 1,000 shareholders or 2,000 shareholders. For all 2,000, I have to send notice, I have to conduct a meeting, I have to facilitate. How much of money I have to spend for this one EGM? Suppose after conducting all the EGM, if the name is not approved by the ministry, then it is one waste only. So in order to save all these unwanted expenses and complications, first I will apply for the name. So board meeting, run, once the name is reserved, then I will get the shareholders approval. And after I get the shareholders approval, I will amend my MOA, I will amend my AOA, and then apply to, this run is only to reserve the unique name. Okay. And then to get the name change in my memorandum of association, I will file Form INC 24 with Ministry of Corporate Affairs. Okay. And once Form INC 24 is approved, the name will be changed and a new certificate of incorporation will be issued. Whenever I'm going to change a private limited to a public limited company or a public limited company to a private limited company, few more formalities that I have to keep in mind is I have to make sure the number of directors, the number of members, the MOA and the AOA, the other clauses also, MOA, AOA also have to be amended. Okay. So whenever, because name change doesn't happen only within a private company. Now I'm ABC Limited, tomorrow I want to become XYZ Limited. Only for that it doesn't change. Name change also refers to private to public, public to private. Even in that case, private limited will get changed to limited. Even that will amount to name change. In that case, even those formalities have to be kept in mind. This is how I normally change the name of a company. Okay. AGM or any general meeting. If I cannot wait till the AGM, then EGM. Basically, general meeting, shareholders meeting. Okay. Coming to the situation clause can be broadly classified into 4 different types. In case of conversion of a private company into a public, at the time for altering AOA, whether special resolution is enough. Yeah, special resolution is enough. At the time of altering AOA. In that meeting itself, we will pass all these things. We will decide to convert the company, approved. In order to convert the company, we'll have to amend the MOA, AOA, approved. All will be different resolutions passed in the same meeting. You can amend your MOA, AOA any number of times. Swapra, I am not actually hosting this. Institute is hosting this. They only have to mail you if you want. So basically, see, I'm telling you again briefly. I call for a board meeting. I decide to change my name, and then I apply for that particular name, whatever I want in run, reserve unique name. The name is reserved. After that, I call for an EGM. I pass a special resolution. I'll file MGT 14 and I'll also file INC 24. INC 24 is for the approval of the name change. Okay. Once the approval is bought, a new certificate of incorporation is issued to me. Simple process. And whenever it is a private to public and public to private, I have to also satisfy certain conditions like the number of directors, the number of members, the private limited definitions. So everything have to be changed according to this particular change. Now let's go to registered office address. Registered office address can be of 4 types. Changes can happen basically of 4 types. One is within local limits. One is outside the local limits. The third one is from one jurisdiction to another jurisdiction. The fourth one is from one state to another state. So now let's discuss briefly how to do this. When it is only within the local limits, the board of directors approval is sufficient. So board approval, INC 22 has to be filed. The address will get amended automatically. Second one, when it is outside the local limits. When it is outside the local limits, what you have to understand here is there are few shareholders in the company. For example, I'm in Chennai, and those shareholders have invested thinking my company is going to be in Chennai. Tomorrow, I'm going to shift my registered office address to another place within the outside the local limits. For example, I'm in Chennai now. I'm shifting to say Madurai. Okay, so if I'm going to shift to another place, then the shareholders have to travel all the way to my company to attend my AGM. Okay, so thinking my company is in this local limit, thinking it is more comfortable for them, they have invested in my company. Now, since I am changing my company location from this location to another location, board approval alone will not be sufficient. I have to get even shareholders approval. That is why when it is outside the local limits, board approval plus shareholders approval, special resolution, MGT 14 and INC 22, 2 forms to be filed. Now, from one jurisdiction to another jurisdiction, which I mean, there is no particular definition for local limits. Is how you can understand this when it is the pin codes are basically, it is within the when I said Chennai, it is within the municipal corporation of Chennai. That is local limit. When I'm going outside the municipal corporation of Chennai, then it becomes outside. Okay, that is how basically you can differentiate it. The third one is from one form INC 22 is an E form. E-form, which will be normally filed for shifting of registered office, intimating the ROC about shifting of registered office. The third one is from one jurisdiction to another jurisdiction. So what do you mean by one jurisdiction to another jurisdiction? I've told you in the last class, two states have particularly two ROCs. For example, Tamil Nadu has in Chennai and also in Coimbatore. Maharashtra has in Mumbai and also in Pune. There are two ROCs. So whenever I'm changing my jurisdiction from Mumbai ROC to Pune ROC, in that case, it will this shifting of registered office from one jurisdiction to another jurisdiction will get triggered. In this case, what I do is board approval, shareholders approval, RD approval. Okay, I have to get the approval of the regional director also. When I'm going to get the approval of the regional director, I will also have to make a newspaper publication which is circulated, one in regional language and one in English. The regional language to be in the language where the registered office is situated, and also in an English newspaper. And once RD approves, the form gets approved. Similarly, when I'm going to talk about from one state to another state, board approval, shareholders approval, RD approval is anyways required. Apart from this, I have to get also my creditors approval and approval from the chief secretary of that particular state. Why chief secretary from that state? Because the business from their state is going off. So from the chief secretary of that state, so creditor approval. So these extra persons approval is also required. Okay, whenever I'm shifting from one state to another state, the level of approvals only differ when it comes to jurisdiction and state. The remaining newspaper publications, everything will remain the same. Okay, keeping this as a basic mindset, when you can read it, you will be able to understand. So if it is within the local limits, board approval; outside the local limits, board approval and shareholders approval. One jurisdiction to another jurisdiction, board approval, shareholder approval, RD approval, newspaper publication, and one state to another state, board approval, shareholders approval, RD approval, newspaper publication, plus creditors approval, and the chief secretary approval, and few more regulatory approvals. Okay. Significant creditor approval. I remember reading significant creditor approval only, Kavita. So, sir, Mike, for you it is making, but even I am seeing and I'm chatting. No. Okay. So this is how you basically amend your situation clause. Then comes your object clause. Object clause, shareholders meeting, special resolution, MGT 14. A new certificate of incorporation will be issued even for object clause amendment. Object clause is very simple. Why for name clause and for object clause new certificate of incorporation is coming? Because you would have known what a SIN number is, in which you will have your industry code, your listing status, your state of incorporation, and one state to another state also new certificate of incorporation will come. Because whenever I change my name of the company, private limited, I may become public limited. So new certificate of incorporation will come because your SIN number will have whether you're a private company or a public company. From one state to another state, your SIN number will have your state, so new certificate of incorporation will come. Whenever I change the object clause also, new certificate of incorporation will come because my industry might change. Okay. SEBI approval is required. Obviously, it will be required. For small things itself, SEBI wants it to be intimated. So, stock exchange approval, listed companies, yeah, obviously stock exchanges have to be intimated. SEBI have to be intimated, their approvals. So that is what is there. Regulatory approvals are required. Suppose X company shifts from Chennai to Mumbai. Then where shall I publish in newspaper? I shall publish it in Chennai because my people have to know that I'm going away, you know. It is in Tamil and English. No need to do it in Marathi. Malavika, RD approval is required even from one jurisdiction to another jurisdiction. It is basically the file goes to RD only, even though it is one jurisdiction to another jurisdiction or one state to another state. The file will both goes to RD only. Yeah, SIN number will change. For all these things, whatever says SIN number, that is why I say SIN number is a combination of all these contents. No, your industry code, the state in which you belong to, your private or public company. So your SIN number will automatically change. So this is how you amend you're amending your memorandum of association, special resolution MGT 14. Then coming to the liability clause, limited to unlimited, unlimited to limited. Whenever you're going to change from unlimited to limited or limited to unlimited, even creditor's approval along with the shareholders approval, creditor's approval is also required. MGT 14 to be filed within 30 days. And coming to capital clause, when you talk about capital clause, your authorized capital can be changed. See, your MOA will normally have your authorized capital. What is the difference between paid up capital and authorized capital? You will obviously know. Paid up capital is how much you have collected so far, and authorized capital is to the extent up to what you are authorized to collect is your authorized capital. So each time, for example, I have 1 crore paid up and authorized. I want to mobilize more funds I want to make my authorized capital to 2 crores. Only when I have authorization, I can collect money. So each time I want to get some authorization, I amend my capital clause. It's not only to increase my authorized capital, it is also to whenever there's a reduction in share capital, whenever there's a split in share capital, whenever there's a consolidation of share capital, all these in all these cases, I will have to amend my capital clause. Okay, so increasing, reduction, split, consolidation, in all these cases, I will have to amend the capital clause. So whenever I'm going to amend the capital clause amendment is only ordinary resolution. However, I will also see my AOA. In my AOA, there will be a share capital clause. In the AOA, if it is mentioned as mentioned in clause 5 of MOA, AOA need not be touched because it is anyway saying as mentioned in clause 5 of the MOA. But however, if AOA is also specifically saying anything about the capital criteria, then even AOA have to be amended, in which case it is a special resolution, and MOA have to be amended, in which case it is an ordinary resolution. After the capital, after the resolutions have passed, in case of special resolution, you will file form MGT 14. In case of an ordinary resolution, you will file only form SH7. SH7 is for capital clause, which has to be filed within 30 days from the date of amendment. SH7. Okay, this is how you will amend the capital clause. Subscriber clause cannot be amended. Now I will see the questions, and after I see the questions, we will again have a break for 2-3 minutes and then we will continue. Okay, let me see the questions. Object clause, it is only special resolution and MGT 14. There's no other procedure. Sardeep Singh. Danili Kabul, I'm not able to understand your question. If any litigation after the issue of new shares comes in a contractual relation with earlier name, then only when there is no contradiction to an earlier name, a run form will get approved or run form will not get approved. Once it is approved, the name belongs to you. No one can change it. What is the difference between ROC and RD? See, Ministry of Corporate Affairs is there. That ministry, Nirmala Sitharaman madam, so she is the head of the ministry now. They cannot do everything. They should have branch offices below, which is located in each region, and there will be a head for that regional offices who is called as the regional director, and those regional director will have sub offices below them, which is called as the registrar of companies. Okay, so RD is basically a step above ROC. Okay, these are again offices below that. That is the difference between RD and ROC. Is there any specified format for explanatory statement? Yes, there is a specified format for each and every section. Whenever you talk about special resolution, if you read the particular as may be prescribed, the rules, each rule will particularly say your explanatory statement should consist of so and so, so and so, and so and so. So all those particulars should be there. So for every section has its own requirement. The explanatory statement should have all these things. Though there is a specified format for explanatory statement, which has to be followed as asked in each and every section. ROC is not the authority to register company. Now CRC is the authority, Central Registration Center. There is no time gap for amending MOA and AOAs. Which is the common clause of MOA and AOA? The capital clause is the common clause. Sir, should a company give opt out option to descending shareholders if they don't want to continue? Your Malavika, you're talking about in case of takeover, yes, you have to give an exit option. That is only in case of takeover. Or it is the discretion of the company. How to get resolution? Show of hand or by poll? Anything is fine. See, you cannot file a litigation when you are. So, Danili Kabul, I'm answering to your question. Whenever I'm going to make a trademark application, I can raise an objection, I can file a litigation, I can put infringement on all these things only in trademark. When the company name is going to get registered, the company will, the Ministry of Corporate Affairs, they themselves, they will do a detailed search based on the existing companies that are already registered and the existing registered trademarks, and only after they getting themselves satisfied, they will approve that name and give. And the chances of winning that litigation after the name is approved by the ROC is very, very minimal. You may not win that case. Okay. So we'll have a small break for 2 minutes again, and then we'll continue. Okay. We'll start. There have been few questions. One-person company, one-man company. In the colloquial wordings, they would have in some place they would have mentioned as one-man company, but there's no particular concept called as a one-man company. When we are referring to the type of companies that are there in Companies Act, it is only one-person company. There's no concept called as one-man company. When we call as a one-man company, it also refers to a sole proprietary because there's no definition or particular usage. Okay, Sohan Doshi is saying it is used outside India. OPC is used in India. Okay, I didn't know that. I think Kabul is again having more doubts on this. Specifically, if we keep seeing too many doubts related to the same thing, it will take a lot of time, Kabul. I really want to answer to your questions, but others also might start getting little. Okay. Now, there's half an hour left. In this half an hour, I will explain you dormant company and striking the name of companies. These two are small chapters related to each other. So these two we can complete now, next half an hour. So let me share you a PowerPoint for that. 1 second. Let me share you. I'm from Chennai. I stay in Chennai. I practice in Chennai. Narayana Murthy. Tamil Dan. What was the question earlier? Sardeep Singh was asking question. What material? See, what I would normally suggest, which material to use. Basically, if I am going to, what normally institute does, it will appoint a panel of people to prepare question papers for you. And that panel of people, they will be given your particular study material and they'll say you will have to give questions. In the screen you can see my number. When you, who wants my number? but don't call, WhatsApp me, because most of the time if you keep calling, I may not be able to attend. I'm also okay. So yeah. So there will be a panel of people who are preparing your question paper, and the institute, what they'll basically do, they will give you this uh, study material, and they will say, sir, prepare question paper based on the study material. So from where the questions are going to come to you? From the study material. So which book, if you ask me to refer, I would normally prefer saying that study material only. Okay. Yeah, object clause can be changed in an MOU in any situation, provided you that is a legally allowed business to do. Okay. So let's see the striking the name of a company. So whenever I'm going to talk about striking the name of the companies, see, 2.5 years back, what happened? ROC has cancelled registration of nearly 2.5 lakh companies in India. So nearly 2.5 lakh companies in India were striked off. What do you mean by strike off? Registrar of companies will basically have the company details uh, in its record, and whenever, and this ROC wants to always keep its record very clean and neat. Whenever there is any companies that are not performing, that no activity is going in that company, they would not like to have those type of companies in their register. They would like to score it off, strike the name of the companies, so that only good companies, good performing companies will be there. 2.5 years back, what happened? Nearly 2,50,000 companies' names were striked off, saying that there are so many companies which are inactive. Oh, fine. If you want the notes, whatever I have with you, I will share it to you in WhatsApp. Simran, fine. Or I can also give the note to the organizer, so he can also circulate it to you. So what I thought was, after I complete everything, the portions whatever I've completed, I thought I can put aggregate it and give it to you, so you can start reading it. Because my classes are only 4 more classes are left. Okay, so 2.5 years, we'll make it fast now. Uh, Concentrate on this particular subject. What we are talking now. No chat. I'm keeping the chat down. Distracting me now. Okay. So 2.5 years back, what happened? 2,50,000 companies were striked off. So to understand why the strike off is happening, how ROC can strike off, ROC has the power to strike the name of the companies if ROC is satisfied, registrar of company is satisfied that this particular company does not do any business activity for 1 year from the date of incorporation, or for 2 continuous years. In that case, the name of the companies can be striked off. Okay, so whenever a company does not do any business within 1 year from the date of its incorporation, or for 2 continuous years, in that case, the name of the company can be striked off by the ROC. Now, keeping this basic condition, how can you say whether I'm doing business or not? That is why every year I file a return with the ROC. I will file from MGT 7 and AOC 4 with ROC. Whenever I don't file these returns with the ROC will think that I'm not doing any business. So it is very, very important for a company to make all these return filings on time. So ROC will be aware, okay, this person is doing some business. Okay. Now, Section 248 talks about striking the name of the companies. Section 248 talks about striking the names of the companies, where it's saying the striking the name of the company can be done either by the registrar or by the company. So when the company is doing it is voluntary strike off, because at times I am running a company, but then I don't want to say, for example, I don't want to continue this business, so I want to remove the name from the registrar. In that case, I can go for voluntary strike off. In that case, it will be by the company in its own name, or the registrar. The registrar, if he is seeing that you people are not doing any business, in that case, the registrar will strike off. So, section 248 talks about removal of the name either by the registrar or by the company. So, whenever the registrar is removing the name, it is spoken under subsection 1, section 248, subsection 1. So what is it saying? Section 248 provides that in case the registrar has a reasonable cause to believe that a company has failed to commence its business within 1 year from the date of its incorporation, or a company has not carried on any business operation for a period of 2 immediately preceding financial years, and has not made any application, because if you are not doing any business for 1 year or 2 continuous years, in that case you should at least apply to become a dormant company under section 455, and you have not made an application to become dormant company also, you're simply sitting like that. In that case, ROC will send STK1 to all the directors of the company. So what is this STK1? STK1 is a particular notice in which it will say your company is not performing. Tell us the reason why we should not close your company. Reply us within 30 days. If you don't reply us within 30 days, we will close your company. That is only STK1. So that letter format is called as STK1, giving a reasonable opportunity to be heard. And after that also, if the company, if the directors are not responding, what the director can say, sir, please don't close my company, give us 2 months time, we will try to finish up all the pending filings, we will become active. If the directors are not responding that way, in that case ROC can go ahead and they can strike the name of the companies. Okay, when a company can voluntarily strike the name of the company, as per the provisions of subsection 2, subsection 1 was ROC. Subsection 2, a company may apply for removal of name from the register of company subject to the following 2 conditions. The company should not have any liability. Suppose if the company has a liability, I should go only through winding up process, not through strike off process. So strike off is like basically a fast way of doing. Okay, strike off is basically fast closure. Okay, winding up is a very big process. So in order to bypass winding up, I can come to strike off provided I have no creditors. I should have nil liabilities, and also 75% of the members, a special resolution or a consent of 75% of the members by way of paid up capital is obtained. So now I will ask you a question. What do you mean by, what is the difference between special resolution and consent of 75? Because special resolution itself is 75 only, no? So what is the difference between 75% members consent or special resolution? What is the difference? Pragya, strike off is basically after the company is striked off also for 20 years it will be there. Strike off is like basically like coma, getting into coma. You will still be alive, but you will not be able to do anything. After 20 years, your company will get dissolved. That is called as closure. Okay. So strike. So that is why you have an option to revive your company even if it is striked off. What is the difference? Answer to my question. I'm seeing your questions meanwhile. Kavita, basically, they may strike off. Okay. The provision is saying that the ROC has the power to strike off if you don't do any business for 2 years. It is not mandatory. At times by oversight, if they say, okay, chhod do, leave, then no problem. Special resolution, we need 75% voting. Subangi Atri, no. 75% includes preference shareholders also. Sumoto needs 75%. Special resolution is 75% or more. But consent means 75% if less than. Okay. I'll tell you what is the differences. When I'm going to conduct, see, for example, I'm having say a public limited company. The quorum to conduct a valid meeting for me, the maximum, let me take the maximum quorum itself, more than 5,000 shareholders, but the quorum to conduct a valid meeting is 30 members. Okay. So after the 30 members attend, in that 30, 75% should vote. That is a special resolution. If I'm going to conduct a valid meeting, what do I mean by a special resolution? The members present will vote, in which 2/3 has to be in favor of it, which is a special resolution. So when I'm talking here about conducting, so in which I need not get the consent of all the 5,000 members or more than 5,000 members here, only the members who have attended the meeting, and in that special resolution, that is what a special resolution. If I conduct a valid meeting, in the quorum 75%, or else 75% of the members in terms of paid up capital, then 75 members means 75% of that 5,000. You able to understand the difference? Because the company is not performing, no one will be willing to come for the meeting itself. They'll say we will not come for the meeting. Then you have to get written consent. It is easy to get special resolution, difficult to get the concern only. Am I clear? Did you understand? Okay, good. So no liability. I'm keeping the chat box down. Okay. So here what am I saying? No liability, special resolution, or 75% of the concern I have to get in case of voluntary strike off. Going to the next one. ROC can also strike off, company also can be striked off. There are certain type of companies which cannot be striked off by the ROC. So it cannot be striked off basically by ROC also cannot strike off. I also cannot voluntarily get striked off in certain type of companies. So what are those type of companies which cannot go strike off? Listed company, companies delisted due to non-compliance of listing regulation, vanishing company. What do you mean by vanishing company? The directors are non-traceable. We don't know where the directors are itself. That is only vanishing company. Companies where inspection or investigation is going on, companies in which serious fraud investigation is happening, companies in which compounding of offenses are there, companies in which prosecutions are pending, companies which have public deposits, companies which have charges. So charge means I have loan, I have a secured loan. Section 8 companies, all these type of companies cannot be striked off. Am I clear? What all type of companies cannot be striked off? Akwil Ahmed, no. Special resolution or 75% concern, anyone? Yes. Horam is right, or. So all these, basically what type of companies can't be striked off? All listed companies which were suspended from listing, companies in which investigation or some continuation of delay or compounding or some litigation, or all problem related items are there, those cannot get striked off. Section 8 companies, companies which have charges, companies which have public deposits, all these type of companies cannot be striked off. Suppose if my company gets striked off, then I have an option to revive my company. Okay, so if I want, for example, I was in coma, for example, and after I got recovered, the company got into coma. In that case, what will I do? I want to revive my company. how will I revive my company? By making a petition to NCLT, National Company Law Tribunal, under section 252. I have to make a petition and I can revive the company. So the striked off company will be like that, striked off for maximum 20 years. That is why even though the company gets striked off, that company name cannot be used by anyone else. Income tax rate, see, other regulations and all these things also, in case of vanishing company, no compliance under any act would have been done. And it is very difficult to identify those people also. And FEMA, for income tax return, even though you pay the income tax return on time, even though you file your GST returns on time, if you don't file the Companies Act return, that is your annual return on time, you will be considered as inactive and you will be striked off. Okay, so if I want, so by making a petition to NCLT, I can revive my company. So these companies will be will be as in the strike off status for 20 years. After 20 years, it will get dissolved. That is why for the next 20 years, that particular name will not be given to any other company. So any other company also cannot register in that particular name. And for the first 3 years, it is basically any interested party can make an application to revive the company for the first 3 years. After the 3 years, only the company creditors, employees, or the company itself, which is the directors of the company or the shareholders of the company, only these 4 persons have the right to make a petition to NCLT. Okay, shareholders, creditors, employees, directors. Only these 4 people have the right to revive the company after 3 years, but within 20 years. Up to 3 years, any interested party can make an application to revive that company. So by making a petition to NCLT, you can revive the company. Okay. All company related items you have to file only in NCLT. Okay. Appeal will go to NCLAT, and after NCLAT you can go to Supreme Court. Second. Okay, now coming to dormant company. What do you mean by a dormant company? So we've seen any company which is inactive for 1 year from the date of incorporation or 2 continuous years, they can apply to become a dormant company. These type of companies can apply to become a dormant company. What do you mean by a dormant company? You are going to sleep for some time, okay, which is for a maximum of 5 years. Okay, I've explained in the yesterday's class itself why dormant company, why the status we are taking and all these things. So I'm not repeating it again. And here one more important word that you have to remember is significant accounting transaction, which is inactive and which has not made any significant transactions. What do you mean by significant transaction? Significant transactions are those transactions apart from your normal day-to-day transactions, like the overheads, the electricity bill, the rentals that you pay, the employee salary that you pay, the share allotment dates, the government fees that you pay. All these will not be considered as significant accounting transactions. Apart from this, if you do any other transactions which is related to the company's business, in that case, it will be considered as a significant accounting transaction. So you can apply for a dormant status only if you are inactive and if you don't have any significant accounting transactions. The application to become a dormant company, you will have to make a application in form MSC1, and if the ROC is satisfied that yes, you are inactive only, we will give you dormant status. In that case, the certificate for inactive status will be issued by ROC in form MSC2. Even though I am in a dormant status, even dormant companies have to file certain returns every year, which will be filed in form MSC4. And if I am active, I've become active, I have to apply to ROC to become an active company in form MSC4. And after I become an active company, the reactive company status will be given by the ROC in form MSC5. So MSC1, MSC2, MSC3, MSC4, MSC5, there are 5. Okay, I will apply to become a dormant company in MSC1. ROC will say, yes, you are a dormant company in form MSC2. Every year I have to file a return in MSC3. I have to apply for active status back in MSC4. ROC will recognize me as an active company in form MSC5. Okay, even certain type of companies again cannot apply for dormant status, where again inspection, inquiry, investigation has been ordered or has been taken place, or if any prosecution is there, or if it's got public deposits, and if there is any, if I don't have any outstanding loan, and whether secured or unsecured, and if there is any outstanding loan, in case if it is an unsecured loan, the company can still apply after getting the concurrence of the lender. In case of secured loan, I can for sure not apply for dormant status. If it is an unsecured loan, after getting the consent of the unsecured creditor, I can apply for dormant status. I can also, in case there's a dispute between the management, directors and all are fighting or anything in this, even in that case, Nidhi company, I will explain in the next class. Because with this, I'll be completing today's class. I will see 1 or 2 questions of yours and we'll end today's session. Okay. There is no dispute. There should not be any disputes between the management also. I should not have any statutory dues like income tax returns, PF, income tax payments, or PF or ESI dues. No dues should be there. Workman dues should not be there. And the stock should not have listed securities in or outside India. In all these cases, I cannot apply for dormant status. Only other type of companies will be eligible to apply for dormant status. Restoration, I've already explained you the procedure. Company, member, workman, creditor can only make an application. With this, striking off the name of a company, dormant status is also over. Nidhi company and other financial services companies and all, I will explain in the next class. The mandatory registrations that are required, all these things we'll be seeing in the next class. I'll just see questions if any, and then we'll wind up for today. People are saying, okay, enough. Few questions someone has said, I will see that alone. Ashwin, SP means Sanka Funny. Sanka is my house name. Funny means snake. We worship snakes. So Sanka Funny. SP stands for that only. You've been asking this for the 3rd time. Okay. Okay, since most of you are saying thank you, let's end the class. Any doubts, you can ask me in the next class then. Okay. Fine. Thank you. I'm closing the session. That I'm not very sure. You have to ask whether WebEx or Zoom with the ICSA only. I'm just a faculty. Notes, I'll somehow try to make it to reach you. Most of you are asking for it. It will be forced to get converted, become active company after 5 years. If it doesn't get into an active company, you will be forced to become then. I stay in Nungambakam. But so many people are there. How do I share the notes is what I'm thinking. Oh, I am not there in the crash course group. I'm not there in the group. If it is there in the group, I can put it in the group. No, not at all a problem. My number was there, no, in the PPT. The same number as my WhatsApp number. Nice to know you, Narayanamurthy, sir. Yeah, I am Tamil. I'm Telugu, basically. I speak Telugu at home. Okay, I'm closing. Thank you.